Oh, look, I think the best decision I've made was to step into management letting rights. Aerospace engineering, it was a brilliant career. I had 15 years doing it, but I could talk about management rights all day. It's so rewarding.
Syd Douglas here from RAS 360 Property Solutions. Today I'm joined by Troy Edwards from TDK Management. Troy, thank you for coming and joining me today on today's podcast in the Brokers Boardroom.
You're welcome, mate.
How does an aerospace engineer get into management rights? And also, tell us a bit about what TDK Management do.
Yeah, sure. Great question, Syd. I guess I was very lucky. I moved down to Brisbane as a young fellow as an aerospace engineer after completing my uni, and luckily for me, my wife at the time was a conveyancer, and she worked for Richard Abbott & Co. And it might have been around that 96, 97 time frame. She was doing a lot of conveyancing on management and letting rights, and she said to me, I transacted the management rights that we sold last year. They made a few dollars on the management right.
Yeah.
Last year, it was basically given away for free. So back then, developers were creating these management letting rights, and they weren't attaching a lot of dollars to them. So the ripe old age of about 24, Davina and I decided to keep our jobs, but we'd purchase some management letting rights, and we had a crack.
Yeah, right. So you've been in the industry for a couple of years? Since
since the age of 24, so that's about 98.
Yeah.
So I can't do the math, but it's around 30 years, I think.
All right. So you would have seen a bit of activity in the management rights space in your time.
We've definitely seen some changes. I think when we were back doing management rights, the real estate ads, you'd ring up the newspaper and put your ad in the paper. There was no really electronic funds banking. There was no internet really. It was coming out. I think the internet was more that 97, 98 more.
Yeah.
So we'd collect cash. We'd do daily banking. We'd write checks to the owners. A lot's changed now.
Yeah, right.
Yeah.
Tell us a bit about what TDK Management represent and what do TDK Management do?
Yeah, so TDK Management was formed back in 2014 by myself, Damien Windle from PCS Finance, and Kelvin Cotter. And those two gentlemen, they did a lot of syndication prior to TDK. Their idea was to create a new syndication model where, myself as sort of a mentor role in the middle where I could be the conduit between the investors and the working manager. So I'd work a little bit more closely with the working manager running the rights, and I'd know what's going on. And that way, if they had, if they were running off the rails a little bit, doing something that, the partnership didn't want, we could, correct that. And we could also convey back to the partnership what's going on. Although they're silent partners, investment partners, they still want to, know a little bit of what's going on.
Yeah. Give us some high levels, Troy, if you would, on how many management rights you guys are a part of, or you've put together, or you've had some sort of input in, and what is typically your zone or your focus in the world of management rights? What particular aspect does TDK focus on?
Yeah, so over the past 10 years, we've accumulated around 20 community title schemes. Not all of them are owned individually, so we might couple 2 or 3 together, which we call bundling or bolting on. When we first kicked off, in 2014, it took us a couple of years to get our first off the plans, but I think we took on 4 off the plans over a 6-month period in 2016. It nearly killed us. Yeah. And since then, we've accumulated 1 or 2 community title schemes per year. TDK, we only operate long term. We're not really geared up, I guess, for short term.
Long term meaning permanent.
Long term permanent rentals, yeah. And our areas, I guess, the locations that we deal with is around Brisbane, an hour thing. We like to be able to drive to our site and walk around and chat to the managers and see the performance.
Yeah, right. And where's your base, in Brisbane?
Yeah, we're based in Brisbane.
Yeah, okay. So what would typically be the secret sauce when you're looking to acquire or get involved with management rights? What are you looking for on the acquisition full front?
Yeah, well, TDK, we do specialise in off the plan. And the reason we like off the plan is we think that there's better value in the buying, and we can bring our expertise to that off the plan and bring it out of the ground. And, for new operators, I think it's a much more wiser, to go and purchase a going concern or something that's existing, because all the processes are set up there for you. The complex should be running quite smoothly.
Your model, do you incorporate a bit of economy of staff scale? Like, do you have a manager that might oversee one or two schemes, or a caretaker that goes and does multiple gardens, or how does it work for you to make it viable?
So we run we've probably got multiple businesses, maybe 10 businesses covering those 20 community title schemes. Typically, we like to put a set of managers in dedicated to that business, to those couple of management and letting rights. We will share contractor staff such as gardeners, but when it comes to the business, I think it's very important. Even though you can scale, we think it's very important to dedicate a manager towards that community title scheme, even though there might be one or two involved.
And contractor versus employee, is there a preference in your business model?
I think if you're going down the contractor route, it's a lot easier in terms of engagement. They've got their license at ABN. It's just an arrangement. I think if you've got staff, then you're dealing obviously with work cover. You've got super. You've got leave. You've got all of those entitlements. We don't really use staff. We all of our managers are effectively a partner. We I guess get them to buy in with us, if you like. Skin in the game, we call it. And that way, if there's rewards to be had, we pick up letting appointments. We grow the business. We share the love. They share the profit with us.
Troy, tell us about what gets you interested when you're having a conversation at the first time you've been made aware of an off-the-plan opportunity. What are some of the things that jump out from that spreadsheet to you and say, well, this return on investment's great, or these numbers stack up? How do those metrics make it work and make it viable for TDK?
Yeah, well, I think there's an old saying that the profit's in the buying, right? So, when you're looking at off the plan, the multiplier is the big one for us. If it's an attractive multiplier, we're already, very interested and we're looking, a deeper dive, so to speak. After that, we generally will talk to the developer, or if we're talking to a broker, we will, metrics such as, what do we expect in the letting pool? That's obviously going to drive a lot of revenue from the property letting side of the business. And then if we come back to the caretaking side of the business, I guess we're really looking at the setup of the complex to see, what infrastructure's been put in. There's one pool, three pools, if there's gates, barbecues, gym facilities. And then we can, we've sort of got some rule of thumbs on what we would expect as a reasonable body corporate starting salary for that infrastructure to be looked after.
So you'd have a good idea, looking at the caretaking agreement, how many hours, man hours, expenditure would cost to perform those duties, and you'd be able to apply that to the salary and make it work, right?
That's absolutely right.
So some of the key metrics, operational principles and practices. What distinguishes a good opportunity from a bad?
Look, I think there's a number of factors, to be honest. But if you're talking about like return on investment, it will be, you'll be looking for high letting appointment numbers. And that's not just for, profit. It's also protection. It's a lot easier to get top-ups through when you've got a high number of letting appointments, because generally your investor owners are really in sync with what you're doing, and they really do love what you're doing.
Dealing with so many schemes, there's a lot of moving pieces in every puzzle. But with management rights, more so, you've got communities, you've got body corporates. What's the secret to keeping a harmonious scheme and keeping a good relationship with the body corporate?
Look, I think that comes down to just, great caretaking. At the end of the day, you're there, the caretaking agreement is why you're on site. You get, you're rewarded with a bit of caretaking income, but you're not making as much profit there. Your profit comes from your property letting. So I think, it comes down to great caretaking. If the complex looks great, the gardens, nice.
So sometimes you may sort of deliver overs to ensure that the community's happy. They've got a good lot of rapport built up there, which may allow you the flexibility to do other things with your business.
That's right. And if you've got a happy committee, you can find that you can put almost your caretaking to the side and just continue to run, and you can focus on your property letting. When you're doing your property letting, like any sort of business, you're going to receive complaints across the board. Tenants are never always happy because you're telling them what to do or pay rent on time or breaching them for noise. And it's the same with your investor owners. They're happy one day, but then you charge them a let fee, and sometimes they're not. But if you can really sort out your caretaking function, and I'm not just talking about the physical stuff where cleaning. I'm talking about running the complex so that it's a friendly community. I guess enforcing bylaws. By doing that, the committee will effectively leave you alone. They don't really talk to you if they need to.
Being obviously you've got scale in your business. Do you typically have the ownership or the responsibilities with the on-site manager or whoever's facilitating that scheme? They deal with the committee, or do you have a representative in your company that deals with multiple schemes and committees?
No, our view is that the on-site managers that we put in place, who are our partners, they deal directly with the committee. They form the relationships. Generally, a committee, there'll be several members of the committee, there might be 2 or 3, for instance, who reside on site. And so it's much better for them to have that relationship, and especially that face-on-face relationship. And they might meet up on a monthly or second monthly basis to do walkarounds, and that works just so much better.
A big part of any business is typically the people power. You look after the people, they tend to look after you. What's your secret to staff retention and keeping a good, harmonious staffing environment?
For us, for staff retention, I mentioned earlier, our managers are part of our team. They invest in. But I think for when we deal with, say, contractor gardeners, for instance, we always believe just pay them that little bit more. I think if you pay them a little bit more and treat them, well, they'll reward you with loyalty. I think if you try and, skimp and save money and, only pay them $20 an hour, they're going to let you down in the middle of summer when you need them most. I think just, really looking after them.
Give us some insight into the operations and the efficiencies behind that. How do you ensure a business is profitable? And do you apply economy of scale through staffing or through services or contractors to make sure it's profitable?
If I'm thinking about operational efficiencies, I think about, communication is probably the biggest thing we're doing. We're talking to body corporates, owners, tenants, suppliers. Having good communication technology, great iPhone, not just using webmail, but buying some Microsoft products and having your email through that. While I'm on the point, I think if you want to be a little bit more professional, get yourself a domain and have a professional looking email address. Managers at Sienna Village, as opposed to Gav1949 at hotmail.com. So that's how using those sort of communication tools, I think, is a good way, of being able to record and store your communications. That's one way of being efficient. I think, and also being efficient around the business, just having sort of a Boy Scouts motto, being prepared for anything. So, we might contract out our gardens to landscape guys to do, but we will still have our mower and whippersnipper and batteries fully charged. So if they can't make it, and we've got an inspection or owners coming around, we can get out and mow that particular strip or that part of the complex that we're showing. I've always been a strong believer that you have a backup bond cleaning kit, because there'll be one point there'll be some point in time of the year that someone decided that they were going to clean the unit themselves, and at the last minute they decided that after moving out all weekend they're a bit sore and they said, we're not going to clean the unit, and you just can't get a bond cleaner in 2 days. So those sort of efficiencies can really save you, because if not, you're going to be burning time looking for someone else.
Perfect. So some of the acquisition traits, when you're looking to buy a new business, what are some of the things that you're probably more fixated on than others? Is it growth over time? Is it location? Is it the metrics of the community? Some of the things that make it successful to you. Obviously, they work, right?
Yep.
So share a bit of your insight into when you're acquiring a property for TDK.
Yeah.
How important is it to get the location and the metrics right?
Right. So I guess when we first look at a management and lettings right proposal, it's all about the numbers, because that's what attracts us, and we want a certain return on investment. I think, just after COVID, it might have been around that 15% return. Yeah. Interest rates have gone up a lot. So, we're probably only getting 12% or 13% if you're looking at a going concern. We'll look at a number of different things. Once we get past those numbers, we might look at the location, and that can go down to the the real estate component. We want to pay. Obviously, we prefer to buy a unit as part of the purchase. I mean, that gives you a lot of allows you to put up motions. You've got a vote. I think that's very important. It gives you somewhere for your managers to reside on site. We like that. We like to have our managers in the complex. It's not living off site. So, when you talk about location, whilst we'd love to have our managers, managing the Gold Coast, sometimes the real estate there is it's quite expensive in relation to the management rights. So we find ourselves steering ourselves away from that.
But I know you'd probably have a model where, you wouldn't TDK wouldn't look at anything under, say, maybe 50 lots in a scheme. I'm not too sure.
Correct.
But, if you look at, that as for a mum and dad business, that's sort of on the upper end, that's sort of larger for them. But some of the key or the similarities between an under 50 lot scheme versus an over 50 lot scheme, are there any sort of crossovers or anything that become a common problem, whether it's small or large?
I think when you get to around 120 letting appointments, that's the sort of rule of thumb that we use, that one person can manage 120 lets. I think once you get over that, then you've got to make a decision about support staff. It's just too many. So that would be the decision for us. I think for new mum and dads starting out, I started out, we bought a 17-unit complex when we started, and then we moved to 30 and then to 100 and then bigger. I think it's much better.
Did you own those concurrently? Or you sold out and then...
We bought one, we sold one, we bought one, we sold one. And, along the way, we learnt, it was off the plan, so we did a lot of learning ourselves. But I can recall when I went into our third complex, we thought we knew what we were doing and we had some great systems, but we inherited somebody else's systems. And some of it was great, and some of it was not so great. But the good things that their processes, we, I guess, brought them into our set of processes. So for someone starting new, I don't think it's wrong to start with a little 50-unit complex. It's still a good size, and it allows you to cut your teeth without being overburdened by a massive complex.
I think you've touched on a very important part of this whole management rights puzzle, is that you shouldn't have that mindset that it's my way or the highway, or this is the way I do it, and it's there's no variance there. If you look at others' proven success models, and you can adapt a bit and be versatile, you're typically going to be resilient, right?
I agree.
Yeah, perfect. How do you see the management rights world evolving with the likes of AI and all the tech that are coming out? Do you think it's on the right trajectory? Obviously, is the management rights industry progressing with the times? And is there a key sort of tool that you as TDK couldn't do without?
Okay. First of all, I think from AI, management rights is a very service-led industry, and as we move into the future, even though we can do a lot with technology, people still want to talk to people, and people still want to see you, and you need to be around the complex and on site. But I think there are some AI tools, ChatGPT, for instance, can be used just even if you're rewriting, emails, or you're writing a weekly letter or monthly letter out to the committee. You can use these tools really to, just to enhance your word processing skills. So I think as more AI tools are developed, I think, you need to trial them and use them and see if they can enhance your business.
And things like calendars and reminders for scheduling of compliance, like fire hydrants, or you're needing a wall repainted or a tap fixed. Is there a system that you rely on in a day-to-day operations?
We probably use, I guess, most of our trust account software has, actions and notes. We can put a lot of the information in there. We might use calendars. We generally will run a dashboard which has got, all of our, I guess, business reminders, such as, when's remuneration due for an increase? When do we need to do a top-up? Are there any options out there long term that we need to remember to exercise? So we'll definitely use, I guess, a number of tools. And we're also aware, there is some software out there as well, I think, which can put all of this in one place as well. In one place,
Okay. Yeah, good. Troy, without sort of stating the obvious, but the obvious is it's a people business, right? So in this people business, it's crucial that you maintain good relationships with your stakeholder, with your investor, with your lot owner, with the Form 6 owner of your letting appointment. What's the crucial part of that? How do you keep that relationship healthy and keep them with you at all times? Yeah,
so again, I think we come back to that great communication. You've got your software that you're going to be, running. I think also if you're using, good quality trust account software which creates great statements. At the end of the day, your investor owner, wants to see, how much rent they're getting, how many fees they're paying. But if you can wrap that up,
How often would you pick up the phone and talk to your owner?
Look, it depends on the owner. So there are some owners that we probably never spoken. Because, they were a couple of emails and they said, just, look, I don't want to be phoned, I just want to be emailed, and you pick up on that vibe. There's some that just want to be texted, and there are some that like to chat to you. I think that's what you need to sort of work out pretty early on. You'll also have owners there that are keyboard warriors and they can really write some long-winded messages, and at some point you say, I've just got to pick up the phone. This is going to be much easier to resolve, to resolve the issue just by picking up the phone, and you can sort that out then and there.
Obviously, being a broker, I'm in the industry where I'm dealing with very experienced operators, and then I'm dealing with very green potential investors or people coming into the industry for the first time. A lot of my conversation comes down to the lowest common denominator, and that's education. That's understanding the very basics and being able to explain that to people. For someone coming into the industry for the first time, there's a lot of risks involved. With any business, there's risks, right? One of the number one questions I get from a buyer or new investor is, I'm buying these letting appointments. What's stopping an outside agent coming in and raiding my appointments and devaluing my business? How do you, as a predominantly on-site manager-driven business, protect your letting pool and stop outside agents coming in and depleting your business?
Great question. So we will get, from time to time, owners ringing us up and saying, look, what are you charging? It's 7.7 or 8.8%, and I can get, maybe 1% cheaper. But we'll remind them that, look, we're on site and we're walking past your investment property every day. If they're lucky, it's a North Lakes complex. Their agent is in North Lakes. At least they're only 10 minutes. But we've got some owners who may have an agent looking after their property an hour away. They're on the Gold Coast. How they can respond to an emergency if the water's going off, I just don't know. The second thing is, as an on-site manager, as I said, we're communicating with everyone, owners, suppliers, body corporates, and that includes their tenants. So through that, we build a bit of a rapport through the tenant, talking to the tenant, and you'll find that, even when we're doing routine inspections, the tenant now that has a rapport with Troy will go that extra mile just to make the unit look a little bit nicer when I'm doing the inspection, because they don't want to be embarrassed in front of Troy. Whereas if it's a 20-year-old property manager coming across, they probably don't go to that same effort.
Sure. No, being the eyes and ears in real time for an investor can be often very important.
Correct.
But also, most of the time, your on-site manager has got to live with those people, right? So they probably put a little bit more time and effort into making sure they're the quality and probably long-term kind of benefit to the investor.
So if I pick up on that point, we've got some lovely tenants come through, but might be weekend Harley riders.
Yeah.
Now, while that's great, starting a Harley at 5:30 on a Sunday morning, it's going to create issues.
Yeah.
So whilst they'd be perfect in the house and we rented them every day of the week, you've got to make that decision for the best interest of the complex.
Yeah.
That's something that an outside agent may not do. They'll put pretty much any Tom, Dick or Harry in, and they don't think about the consequences of how their lifestyle is going to affect the community.
Yeah, great. Obviously, you've got a lot of decisions to make at any given time, weeks, months, years. What would be one of the hardest decisions you've had to make in your line of work at TDK?
One of the hardest decisions, which sometimes turns out to be an easy decision, is just to reject a deal. So for us,
knowing when to walk away.
Yeah, and just walk away.
Yeah.
And we've had deals where we've been, under contract, but we just couldn't line up our managers, and it was just going to be rushed, and it would have been a poor outcome.
Yeah.
And so we've just made the decision to walk away.
Yeah. Okay.
In reflection, it's an easy decision. On reflection, but it's hard at the time.
Yeah. On the flip side, what's one of the best decisions you've made?
Look, I think the best decision I've made was to step into management letting rights. Aerospace engineering, it was a brilliant career. I had 15 years doing it, but I could talk about management rights all day. It's so rewarding.
Mm-hmm.
If you're a people person, and I am, you be a people person, Syd. That's why you're in this industry. You're just used to talking to people, and that's what you do. You're talking to your owners and your tenants and suppliers and body corporates, and solving issues.
How do you build a long-term relationship with someone? How do you do? What does TDK do differently? What does Troy do to add and complement to that business strategy?
Look, I think it's common sense. I think if you're friendly and you're professional, conversation's easy. Yeah, I think most on-site managers are very enthusiastic.
Yeah.
They're go-getters.
Can-do attitude.
Yeah. They're probably more extroverted than introverted.
Yeah. Now, for economy of scale, we've spoken, we've touched on a few questions. Someone looking to, goals and aspirations to acquire their first property, do a really good job, and perhaps add on, bolt on, grow their portfolio. What kind of things would you recommend to an operator or an investor looking to adapt a strategy where they're looking for growth and looking to bolt on and get a bigger portfolio? How do they acquire additional assets?
Yeah. I think if it was me doing this, I'd certainly want to be adding on those assets close by. I think I'd still want that on-site presence.
Yeah.
So you're going to be an on-site manager, but really you can only reside on-site at one of the complexes.
Yeah.
The second complex, you're still going to be on-site in a daily fashion. So you're still, to me, an on-site manager. So I think provided your complex is close within, within a radius, I think that can work quite well.
Do you think there's an ideal radius, like within 20 Ks or?
Yeah, I think for me, ideally, I'd prefer 5 kilometres or less. Because, depending on traffic, you can work around this if you're trying to schedule multiple inspections. That can be an issue. I think, 25 minutes would probably be your maximum. I wouldn't do it, but there are some operators out there, for whatever reason, that's what they can buy at the time. There is that 25-minute separation. I think if you go longer than that, then depending on what's involved in the management rights, the number of letting appointments, for instance, you're going to run into time issues.
Someone entering the industry for the first time, what 3 pieces of real advice can you give that person looking to enter the industry for the first time? 3 bits of advice. Well, there's probably 1,000 bits of advice, but one is be educated. So there's so much free education around there. You can jump onto a body corporate website and learn all about body corporates. AGMs and EGMs and top-up motions, and even what a body corporate is versus a body corporate committee. So that's education. I think if you're looking to buy, your research is so important. You probably need to be talking to someone like yourself, Syd, working out what you can afford to buy. And then once you know that you want a townhouse or apartment or off the plan or going concern, and you've got that size in mind, I'd be coming back to someone like yourself and asking for some example P&Ls maybe. And then when that complex comes up and you compare the profit and loss that's been prepared
you've got a good feel for whether this is a good deal, or whether you should go ahead.
Yeah, yeah. And I'm always interested when people establish themselves and they get a bit of a reputation and they get to the levels that TDK are. Do you have a mentor yourself that might sort of be able to sort of guide you through a complex situation or help you overcome some maybe personal doubt?
Yeah, I think now that we're at the size we are, I can sort of almost go back to my managers. So even though I am providing, I guess, like a mentoring, function for them, they can bounce some ideas. We're at the size now that with, 10 plus property managers and plus add-ons, if we get a tricky question, it could be about the new break of lease rules that have been brought in, we can bounce that around our forum. But if I don't have that, I notice that there's forums on Facebook these days. Yeah. So the onsite management group. Yeah. I mean, that's a great group to go out and ask questions. Yeah. If the committee's asked you a difficult question or they've asked you to do something which you believe is outside the scope of your caretaking agreement. So there's good advice there. And then lastly, there's ARAMA, and I think we're members of ARAMA. It's this great organisation, and again, you can go there. You can get help. Yeah.
I think it's a common theme. I've had a lot of guests on, and it all comes back to that peak body being there to support you and support the dynamics and the function of the on-site manager.
Yeah.
Troy, thank you very much for your time today. There's a lot of valuable insight you've given and shared with us. I really appreciate your efforts. Thank you very much.
No worries, Sid.
Good on you, mate. Thank you.